You've probably seen videos of traders driving sport cars, of loving in exotic locations, claiming we made 10,000 in a day. That's the highlight reel, not the reality. The truth is, trading is tough and it requires more than just a laptop and a dream. When I first started, I thought trading was about predicting the market. I'd look for patterns, listening to random advices and try to outsmart the charts. But here's what I quickly learned: the market doesn't care about predictions and it will humble if you don't respect it. If I could back in a time and give myself one piece of advice before I started trading, I'd probably have saved myself years of frustration and thousands of dollars. In this video I will share the hard lessons I learned, the traps you need to avoid, and the strategies I wish someone has told me before I ever placed my first trade. The first tip: you need to know about the reality of trading. Trading is a skill, not luck. Most beginners think they can get the luck with a few trades and make it, but successful trading is built on knowledge, preparation and practice. It is not a get-rich-quick scam. Statistically, over 90% of traders fail within their first year because they underestimate the complexity of the market. They come in looking for quick wins and leave after heavy losses. I remember my first big loss. I doubled my account in the first 2 weeks, thinking I was a genius, when I lost it in all one bad trade. Why? Because I had no idea what I was doing. I was just gambling. If you're serious about trading, start by resetting your expectations. It's not about fast money, it's about building a sustainable long-term approach to the financial growth. So why most traders fail? If there's one thing I wish know when I started trading, it's why most traders lose money and how I could avoid becoming one of them. The biggest trading mistake, because all fail, they don't have a plan. They jump into trades with no clear entry or exit strategy, no idea how much we're risking and no system for managing their emotions. It's like driving a car blindfolded. You are going to crash sooner or later. When I first started trading, I seen a green candle and think, wow, this is, I'm buying now. When I panic when the market moved against me and sell at a loss. I was trading emotionally, not logically, and that's a recipe for disaster. A trading plan is your blueprint for success. It tells you when to enter, when to exit, and how much you're willing to risk on each trade. Without it, you're just gambling. Another common mistake is overtrading. You feel the need to be in the market all the time, thinking the more trades you take, the more money you make. But quality beats quantity every time. Focus on highly profitable setups and stick to them. Trading based on fear or greed is a killer. FOMO, fear of missing out, leads to chasing trades, and panic leads to exiting too early or too late. Emotions have no place in trading. They will destroy your account faster than any bad market move. If you want to avoid failing as a trader, you need 3 things: a plan, discipline and emotional control. Trading isn't about making money fast, it's about protecting your capital and letting it wins for you. If you want to know more information about trading plan, go to my previous videos about trading plan and follow the steps what I mentioned before. When I started treating trading like a business instead of a hobby, everything changed, and the mindset shift is what most beginners completely overlook. Think about this: would you start a business without a plan, without knowing your cost, or without understanding the market? Of course not. Yet, most traders treat their accounts like a casino, throwing money into trades and hoping for the best. That's not trading, that's a gambling. Successful traders approach the market like entrepreneurs, where balance their risk, track their performance and focus on the long-term growth instead of short-term wins. We're in it for sustainability, not quick profits. Imagine you're running a business with 10,000 in capital. Would you risk half of it on a single decision? Absolutely not. In trading, your account is your business capital. Protecting it should be your top priority. A general rule is to never risk more than 1 or 2% of your account on a single trade. This way, even if you have a losing streak, your account stays intact and you can recover. You can't improve what you don't measure. Successful traders track where every trade, what worked, what didn't, and why. This helps them refine their strategy and avoid repeating mistakes. Start keeping a trading journal, write down your entry and exit points, your reasoning for the trade, and the outcome. Over time, you will see patterns and learn to identify what works for you. The goal isn't to hit a home run on every trade, it's to build consistent, sustainable, and profits over time. Treating trading like a business means you're focusing on the process over outcome. If you have a solid strategy and stick to it, the profits will follow. I used to chase big wins, thinking one trade would make me rich. Instead, I ended up blowing accounts. When I started focusing on protecting my capital and following a process, I saw consistent growth, even if the wins are smaller. If you want to succeed in a trading, stop treating it like a hobby. Start thinking like a business owner. Protect your capital, track your performance, and focus on the long game. If I could go back to my first day of trading, where's one tool I start using immediately. It's simple, powerful, and completely transformed the way I approach the market. The tool I am talking about is a trading journal. Most beginners underestimate its importance, but let me tell you, it's a game changer. A journal doesn't just track your wins and losses, it helps to understand your strengths, weaknesses, and patterns. When I started to journal my trades, I discovered things about behavior that I never noticed. For example, I realized was constantly overtrading during volatile markets and ignoring my stop loss levels when I was emotional. Once I saw the data, I was able to correct these mistakes. What you need to include in your trading journal. A good trading journal isn't just a log of your trades. Here's what you should include: your entry and exit points, the reason for entering the trade, the market conditions at the time, your emotional state during the trade, the outcome, and what you learned from it. Not just about of money, it's about the mental. Trading journal helps you spot patterns in your decision making. Are you better at trading markets or range bound ones? Do you lose more when you trade emotionally? With self-awareness is crucial for growth. It also builds accountability. When you write down your plan for each trade, you are more likely to stick to it. And when you review your trades, you are focused to confront your mistakes and learn from them. And if you want to start a journal, you don't need fancy software to start. It's a simple spreadsheet or even a notebook with key to consistency. Make it a habit to journal every trade, no exceptions. Trading journal is more than a tool. It's a mirror. It shows you who you are as a trader and helps you become better. If you are not journal your trades, you are missing out one of the most powerful ways to improve. One lesson I wish I could drill into every new trader is this: protecting your capital is more important when chasing profits. Let me explain why this simple mindset shift crucial for your success. When I first started trading, I thought the goal was to make as much money as possible, as fast as possible. But I quickly learned what the key to long-term success isn't about how much you make, it's about how much you keep. Even the best traders in the world experience losses, but what sets them apart is their ability to manage their losses and protect their accounts. Think of your trading capital like foundation of a house. If the foundation cracks, the whole structure collapses. In trading, your account is your foundation. Without it, you can't take advantages of opportunities or recover. Without it, you can take advantages of opportunities or recover from setbacks. For entering any trade, you should know exactly how much you are willing to lose. This is your risk. For most traders, risking 1 or 2% of the account per trade. Before entering a trade, you should know exactly how much you are willing to lose. This is your risk. For most traders, risking 1 or 2% of the account per trade is a safe guideline. This way, even if you hit a losing streak, your account remains intact. Always use a stop loss. It is not just a tool, it's a lifeline. A stop loss ensures you don't lose more when you are prepared to, no matter what happens in the market. Let's say you lose 50% of your account. To get back to where you started, you need to double your remaining balance. A 100% gain. The larger the loss, the harder it becomes to recover. That's why protecting your capital is the number one priority. The most important thing, avoid revenge trading. It's the biggest mistake what newbies making in trading, trying to recover losses quickly by taking impulsive trades. This almost leads to more losses. Instead, take a step back, review what went wrong, and stick to your plan. I once lost 30% of my account in a single day because I ignored my stop loss and kept adding a losing position. That loss was a wake-up call. From that moment on, I made protecting on capital my top priority and completely changed results. And it completely changed my results. Trading is a marathon, not a sprint. Your job as a trader is not to hit home runs every time, it's to stay in the game. By protecting your capital and focusing on risk management, you give yourselves the chance to grow constantly over time. So let's bring it all together. If I could bet to when I started trading, here's what I wish someone had taught me upfront. First, understanding and trading isn't about luck, it's about strategy. Success comes from preparation, not gambling on random trades. Second, focus on learning and adapting, not perfection. Mistakes are part of process, but they only help you grow if you reflect on them. Third, protect your capital at all costs. Without your account, you can't trade. Risk management is your shield in this unpredictable market. Consistency is the key. Small steady wins will always outperform reckless big plays. Build good habits and stick to them. And finally, keep journal. It is not about tracking trades, it's about understanding yourself as a trader. The more self-aware you, the better decisions you'll make. The truth is, trading can be one of the most rewarding journeys you'll ever embark on, but only if you treat it with respect and patience. The market will test you, it will challenge you, and it will humble you. But with the right mindset, a solid plan, and the willingness to learn, you can come out on the top. If this video resonated with you, don't keep these lessons to yourself. Share them with someone who are just starting their training journey, and if you learned your own lessons along the way, drop them in the comments below. Let's help each other. So thank you guys for watching, drop your likes, write comments about your training lessons, and don't forget to follow to my Telegram channel where I drop all the materials from the video. Bye bye.